Alphabet shares are higher right now after reporting a beat on the top and bottom lines just moments ago. Joining us now is Evercore ISI head of internet research Mark Mahaney and D.A. Davidson head of technology research Gil Luria. Mark has an outperform on Alphabet while Gil is at a neutral rating. It's great to have you both here. Mark, I'll start with you because, yes, we had beats on the top and bottom lines, but you also had Google Cloud accelerating and revenue coming in much stronger there, plus the search revenue, which everybody has been a little spooked about coming into this print, also better than expectations. Your takeaway?
Yeah, I think you set it up right, Morgan. I think the real standout, I think the two biggest standouts are that Google Cloud growth acceleration, which should be a positive read-through for AWS and from Microsoft too. Cloud as an industry, we think is accelerating kind of across the board for a variety of reasons, one of which is AI workloads, Gen AI workloads. And then the other thing I thought was impressive about the business kind of stood out to us was were the margins. They had sort of warned us, told us that they were going to kind of step up headcount hiring in the September quarter, but the margins were essentially flattish. So I think that's a sign, but we want to get into it in the earnings call, of newfound efficiencies and cost savings in the business model. And I think there's probably a lot more if you get a new CFO that really wants to dig into it. The search and the YouTube results were a little bit better than expected. That's good. There's no negative inflection in those results, and it should be a modestly positive read through for the rest of the ad names.
Gil, in the comments we've gotten so far, management saying in cloud our AI solutions are helping drive deeper product adoption with existing customers, attract new customers, and win larger deals. And we know this is one of four companies, one of four AI hyperscalers that are spending tens of billions of dollars to build out their AI infrastructure. Are we starting to see that return on investment materialize here?
Well, for Google, this is definitely a great level of success. To Mark's point, their margins in the Google Cloud business improved from 11% to 17% as their revenue growth accelerated from 29 to 35%. But that's more, the actual return on investment depends more on their customers. Are their customers going to build valuable products that justify the continued build out of the data center? Now, Google has a big advantage in the build out of the data center for two reasons. One is they can leverage those capabilities for the rest of their business. And two is their TPUs, their in-house chips are second only to NVIDIA, which gives them a big cost advantage, especially over Azure in terms of this growth, which is part of the reason they are now the fastest growing of the three hyperscalers.
So I want to shift gears here, Mark, and I want to ask you about Snap, which is up 2.5% right now. This tends to be a very big mover post-earnings, and typically, at least in recent quarters, it's been a big mover to the downside. The fact that we had some better numbers than expected and better metrics than expected with Snap, can we say that we've hit a pivot point and a turn toward recovery for this name as they have rolled out a new app design and new features?
I don't think so yet, Morgan. And it's a big question mark for me. I'm on the sidelines on Snap, the stock. They need a lot of product innovation, especially on the advertiser side. Now they're going through a major redo of the consumer interface, a unified news feed. So they won't call it that, but that's kind of what it is. And I assume that'll work, but this is going to take a couple more quarters to roll out. We were sort of hoping to see it in the back half of this year. That's fine. I'd rather them get it right. I don't think you're yet at an inflection point in Snap. And I think that kind of showed up a little bit in the revenue results and in their revenue outlook, which was fine, but nothing dramatically wrong.
And Gil, looking to the Alphabet results, how does this set us up for Microsoft and others later in the week, especially when we are talking about cloud penetration? Is this a zero-sum game?
Not at this point. At this point, we would expect that Azure will have acceleration in growth as well. And more importantly, that Amazon will have a further acceleration growth in AWS. Let's not forget, AWS is the biggest hyperscaler. So for them, the acceleration is more meaningful as the market leader. And they also have their own chips. So they can also scale this business at increased profitability. That's a very good read through. And then we're going to listen to all three of them in terms of commentary on CapEx, which will bode well if they continue to insist that CapEx is yielding results. That'll bode well for NVIDIA next month.